So we've got no money coming into the crypto economy. Look at the growth of stablecoins. It's been stable since the summer. So over time, people need to pay bills, realize stuff, and foundations need to sell tokens and all of those things, and the number go down because we've not had liquidity in the crypto economy. I just don't want to confuse that with it's the death of layer ones, it's the nothing's going to work, DeFi is not going to happen. It's like, no, it's just a slow economy right now in crypto land. We've gone through a slow patch. And I get all of these, but you said, and all of this stuff starts happening. And that's reached a crescendo yesterday. And I'm like, yeah, it's probably the bottom.
Today, as the recent market sell-off has investors worried, a super acceleration is coming for Bitcoin and crypto, and many are anticipating the bullish momentum and expect new all-time highs as we head into 2026. As this momentum is building, the institutions are quietly positioning themselves, and Raoul Pal says everything is about to change. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets. The former Goldman Sachs executive gives a portfolio update. He says the next phase of the crypto cycle is critical, and why in 2025 we'll see massive capital pouring into the space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Let's get right into the latest interview with Raoul Pal, as he gives his market prediction for the days and weeks ahead. Drop your comments down below and subscribe if you enjoy the content we do here.
The truth is when you actually kind of filter out the noise, what it is people are so desperate to get ahead. It's a real kind of, right, they all think of this as their one chance. So it's like a serious thing. But they haven't been around financial markets or volatile assets where you have to learn how to do this. And the way to do it is do nothing and stop worrying about it. But, every day they think the P&L goes down. It's like my financial future's ruined. It's all over for me. And then the next day they're like, I'm going to be a gazillionaire. I'm going to order a Lambo. It's like, just don't do any of that. I've seen entire hedge funds in the crypto space, because I've got the asset management business that invests in crypto hedge funds, rewriting their mandates to trade equities. And I'm this is a signal, generally speaking. And, when you say, well, why have equities done better? What's going on? Why is crypto underperformed? Why is gold outperformed? It's all based down onto the same everything code framework. So gold is currently, gold used to be real rates. That used to be what gold traded on for a long period of time. It's now current financial conditions. Financial conditions lead by about 6 months Bitcoin. So when you put those up, share the chart on X, it's like a perfect match. Is it going to match perfectly in the end? Who knows? But basically, it's living in the future gold or living in present financial conditions. Equities have been living in liquidity, as have crypto. But since the Fed shut down and the draining of the reverse repo, there's been issues in the plumbing of the financial system. So liquidity has been drained out. And equities have a bid because everybody's structurally underweight tech stocks. It's a huge problem. I mean, every survey is like record underweight tech stocks, and yet they keep ripping higher. So they're having to chase, and then you've got the 401k flows that come in by the passive investing. But crypto doesn't have that. So what's happened is it suffered from liquidity over this weird period of tightness that's occurred, which was the rebuild of the Treasury General Account and then their inability to drain it because of the government shutdown. They've got nothing to spend the money on. So it just keeps stacking up. It's $960 billion right now, and they can't spend it until the government reopens. And because the reverse repo is empty, there's no other liquidity measure they've got. So lo and behold, fucking repo market blows up or starts showing signs of stress, and the Fed have to step away from QT, and things will change a lot next year. There's a lot to come out of all of this. This is the chart that really kind of matters. It's like the total three. So that's excluding Bitcoin and ETH.
Yeah.
Right. So we still haven't gone through where we were peak of the prior cycle. And it's been a slow crawl versus a speedy ramp. And this is because I think it's to do with the debt maturity got extended. So this is like a weird mid-year. Yes, I did imagine it was going to break this. I thought in July it was going to break through. Not that I'd do anything about it. And then it had the big puke. But really, a pattern like this usually means that we will eventually have what we want. But it's the patience that's tested everybody. Because this has been a long period where a lot of this stuff has not gone to highs. And even then, it was January that everything else was at its highs, like SUI and everything else. And so everyone's been waiting 11 months or 10 months to have anything.
Now people are calling for the top, and I'm like, this just doesn't feel like a top. Like when people are like this, crashing out every single week, that's not a top. That's not Bitcoin at 110K, like 10%.
No, it's when everybody's on X saying, celebrating each 1,000 rise, Bitcoin feels great at 150,000. I wonder how 151,000. When everybody's doing that kind of stuff, you kind of know that we're getting a bit effervescent. But also, when I look at it in macro terms, is all the macro tops have come with business cycle tops or the business cycle low. They've all come with liquidity tops, liquidity's expanding. And then when you look on a forward basis, we've got the government shutdown to reopen. That's going to open $1 trillion of flow out of the Treasury General account. We've got Fed rate cuts coming. We've got the changes to the SLR, which is the minimum requirements for banks. We've got potential balance sheet expansion coming. We've got China expanding its balance sheet. We've got the Trump tax cuts to come into place. We've got, the list is endless of liquidity that's to come. And we've got to roll $10 trillion of debts.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
My view is we had this extended year, which was this year, because they didn't need to roll the debt because the debt got matured to 5 years. So we just had ongoing liquidity. And I think 2026 is going to be a banner year.
Can I ask?
I still think the end of this, I think November, December are going to be very strong here as well. It's been a stupid easy environment in tech. But yes, the decoupling of NASDAQ from crypto has been interesting, but I think it's explainable. So normally you need to figure out why something is happening and is there real signal there? So one signal may be crypto's topped and everything else is going to fall afterwards. I get it, but I would give that a 20% probability or 30% probability versus crypto's being affected by liquidity at the margin because it's the most influenced by liquidity. And when it comes back, it plays catch up. So the alligator jaws get close to the upside. And, you at some point the NASDAQ will need to correct, but structurally, and there used to be a hedge fund who was one of my clients based out of Miami. Every year they come on with the same trade and every year it worked. And that trade was around about now. They come and buy call spreads and sell downside puts in every major market because the year-end rally effect is real. So if you look at it across the board, it's telling you there's no money flowing in. Look at the growth of stablecoins. It's been stable since the summer, right? So we've got no money coming into the crypto economy. So over time, people need to pay bills, realize stuff, and foundations need to sell tokens and all of those things, and the number go down because we've not had liquidity in the crypto economy. So I just don't want to confuse that with it's the death of layer ones, it's nothing's going to work, DeFi is not going to happen. It's like, no, it's just a slow economy right now in crypto land. We've gone through a slow patch. That's how I think about it. I think the big ones know what they're doing. and the smaller ones could get messy. I mean, I've never liked this DAT trade. In the end, a few people will figure it out, but it's so complicated. But anybody can understand the capital structure of MicroStrategies without some PhD in nuclear physics. I mean, it's so ridiculous. I just think there's no such thing as free money generally. And as soon as people think there's free money, everything goes to shit. Outside of the ETH and MicroStrategies, I got approached by pretty much every single one.
Yeah, I can imagine.
And to lead them. And I'm like, I'm not going on the board of a US company. I live in the Cayman Islands. It's tax-free. I'm not doing that. And also I'm like, I'm not really comfortable with these. Now, again, they're not terrible and people will figure it out. But I think we have to go through some pain in these. But also the DATs are showing you there's not much money flowing into the crypto economy either. So the premium ability has gone down as well. So it's telling us something about liquidity flows in markets.
Yeah, I agree. The DAT is really a speculation trade as well, right? Like when everything starts to trade at like 1.5 to 2 times MNAV, it's when everyone thinks crypto is about to change the world and we're about to do all these crazy things on the equity side of the business. I think it could get a little bit messier with some of these lower quality ones. I do think that luckily all the biggest DATs are trading fine. Like BitMine is trading fine. I'm talking about relative to their MNAV here, not outright stock price. And MicroStrategy is still trading above 1. It's still trading above 1. So the trade can still go. But for some of the smaller ones, I saw today that 10% of all of ETH's supply has now been bought by the DATs and by the ETFs. How insane is that? And it's still only briefly touched an all-time high. And this trade has really gone on for the last 6 months.
I had a thesis from the last cycle that this cycle would end up having a shortage of ETH because of the burn mechanism. And then if you start locking up ETH like this in vehicles that aren't going to sell very quickly, you end up with a shortage of the stuff. So it gets very convex. So it feels like it could do that. It kind of breaks 5,000 before you know it's trading 10 in like a month.
I mean,
doubled in a month already.
10%. And this kind of started happening in May, right? Like maybe April, we started to see some of the big inflows happening into the ETF. So for 10% of the whole supply to be bought in roughly 6 months, if that can continue even somewhat, even just the ETF side of it.
Powell stresses this pattern is normal and necessary to flush out weak hands and reset leverage. He highlights Bitcoin's high correlation to global liquidity, which remains supportive, even during temporary liquidity air pockets. He believes the market is setting up for another strong leg higher. Similarly, Bitwise CIO Matt Haugen supports this view, pointing to a dip-then-rip pattern, where sharp pullbacks are typically followed by massive rallies, up to 190% gains historically. Both argue that patience, not panic, is key. The banana zone is alive, just misunderstood. As the momentum in the crypto market is building and institutions are positioning themselves, Raoul Pal says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. He says we're about to see massive capital pouring into the crypto space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He recently shared his take on the current economic uncertainty, with tariffs and recession fears creating market volatility, that a major market rally is on the horizon. And that's where Bitcoin comes in. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. So we could see a sharp recovery in the next week. The bottom line, Bitcoin's next big move depends on how this plays out.